We're talking the major tech news of the week with Zach Townsend. He is a CEO of Meanwhile, an insurance company based on crypto, the first of its kind. We'll be talking about Meanwhile, it's the industry he's in, and two pieces of very important news: FedNow launching and Twitter rebranding to X. What are the implications of these new developments? Thank you, Zach, for joining us. Pleasure to host you today, Zach.
Great. Thanks for being here.
Let's talk about FedNow first. The service launched last week. As of now, it's available to 41 banks, 15 service providers nationwide. The aim here, from what I've read, is to make America catch up to some of its peers like the UK, India, Brazil, which already have similar services. The idea is to reduce transaction times from days to seconds, if not even less. And, there's arguments on both sides as to whether or not this is going to be a transformative new technology for good, or this is going to be something that's going to fail and ultimately not add much value. I want to see where you stand on this debate. First of all, tell us how you think it works and whether or not it's going to add any value to e-commerce and our lives overall.
Great. Yeah, well, as you mentioned, 41 financial institutions have signed up and 15 service providers. And first off, I think it's important to note that's not that many, right? So there are nearly 4,000 banks in the US. There are many thousands of service providers. So this initiative is starting pretty small. It's also only allows you to receive real-time payments. You can't even send them. I think when you look around the world, the countries you mentioned, the UK launched real-time payments in 2007. Brazil launched it a few years ago. But what was interesting about Brazil was actually mandated, right? So every consumer in the country could immediately send real-time payments. Here, we have a bunch of banks, some service providers, they're voluntarily signing up, and the Fed's out there, saying that, well, market forces will, make it all happen and we'll all get there. But at the end of the day, I think for a lot of banks, particularly community banks, so many of their fees come from overdraft fees, from late fees, like just so much of their revenue is related to these things that actually real-time payments disrupt. So I don't think we're going to see the rapid adoption that some others think we might see. I think at the end of the day, you mentioned e-commerce. Every merchant in the country would rather pay 1 cent for a real-time transaction than pay 2% for credit card fees. So I think you can see merchants potentially really interested in that, but I'm not sure that we're going to see the bank adoption because there's no mandate. There's really no incentive. If anything, there's a disincentive for most banks to adopt it.
Why is there a disincentive?
Yeah, again, because for a lot of community banks, you might see 25%, 50% of their revenues are directly related to overdraft fees, to late fees. And if there was, national 100% adoption of real-time payments, then there wouldn't be any late fees, or there wouldn't be as many overdraft fees, because a lot of normal consumers, the problem is, they get paid on a Friday and they need to pay their bills, but those bills don't get paid till Tuesday, Wednesday, Thursday of the next week using ACH. So if there was a real-time payment system that worked and was effective and was available to everyone in the country, that would be amazing for consumers. But instead, what we have is this voluntary FedNow system that banks are putting an extraordinary markup on, isn't directly available to consumers, and I just don't think we're going to see the widespread adoption that would be good for consumers, but isn't actually something that the banks want to do.
Could you make the statement that this is kind of like a beta version and that they're going to add more features like the send feature later on?
Yeah, again, I certainly hope so, because the real-time payment system that Mexico released in 2005 or that the UK released in 2007, had more features than this real-time payment system that the Fed launched. Having said that, the clearinghouse, which is a sort of coalition of banks, has a competitive product called real-time payments, RTP, that they launched in 2017-18. FedNow, I think their hope is because they're the Fed, there'd be a lot of adoption. But even that, that system hasn't seen a huge amount of adoption either. So yes, it's clearly an early version of this product. because again, you can only receive, you can't even like voluntarily, choose to send. Um, but I think it's going to be a slow rollout, a slow evolution, slow pickup. So fundamentally, I don't think we're going to, there's a lot of news reports that like, oh, real-time payments are here and it's going to change everything. I think the practical reality is they launched a system without that many people, without that many features, and it's going to be a long haul until we see it actually affecting consumer behavior.
So do you think it's going to have any immediate impact on usage for other payment services like PayPal, Venmo? Are those going to get replaced?
Yeah. I don't think so. I mean, look, if you use Venmo, I think you think it's a real-time payment system, whether it is in reality in the back or not. And when, but actually, it is an interesting case. When you're on Venmo and you withdraw money, they actually give you the choice. You can either withdraw the money using ACH, which takes 2 to 3 days, and that's free. They eat that cost. Or you can get the money immediately, which is on Visa's direct debit program, and I think that costs like 1.9%. And the point of that is that like real-time payments is already here. There are already options. It just like costs too much money. And the truth is that the Fed has brought this new system to market, but again, not many people have picked it up. And a lot of the banks are trying to, charge, percentage fees for consumers. Um, just like they are in these other these other like profit centers. So I think what would be revolutionary is if there were a system as cheap as ACH, which is like 1 or 2 pennies per transaction, and was real time. Again, which is what they have in Mexico, they have in Brazil, they have in India, they have in the UK. That isn't what they've created. They've created a system that people get to voluntarily sign up, banks get to voluntarily sign up for, that aren't going directly to consumers, that banks get to decide what the markup is, many of whom are, putting quite onerous markups on it. And I think it's just going to be another payment system in a whole, slew of payment systems that consumers can choose, but they aren't going to fundamentally change the dynamics.
So you're saying banks are going to mark up their costs. Are you saying that service fees
Yeah, yeah.
for real-time payments are going to be even higher than before?
I don't know if they'll be higher, but I don't think they're going to be significantly lower, which is what we need to really make things.
Well, let me ask you this, Zach. Would you pay if you were a business, let's say transacting B2B, would you pay a premium for faster transactions?
I think it depends what the payment is, but let's say I'd say categorically yes. I do think that um, B2B payments tend to be quite large. The fees are probably, if it's I've heard about fees that it might be $15 to do it. Well, that's cheaper than a wire, so that makes sense. But I think the real change that could occur is for if I could accept payments from every one of my users, or if I could pay out to all of my users in real time, that would be fundamentally different. And obviously, I'm not going to pay $15 for that. And so I think what there ideally would be, is a system that was between ACH at pennies to make a transaction and between wires, which are, $25 a transaction. And that isn't exactly what the Fed's launched.
Okay. Another misconception prior to launch I've heard is that this is, well, misconception. I mean, a belief, let's put it that way, that this is somehow a precursor to a CBDC. Now, the Fed itself has denied this in its FAQ section on its website. There is a section called "Is the FedNow service replacing cash? Is it a central bank digital currency?" And they answered it as such: no, the FedNow service is not related to a digital currency. It's like you said, it's a payment service such as Fed ACH and FedWire. The FedNow service is neither a form of currency nor a step toward eliminating any form of payment, including cash. And it goes on to further explain that to implement a CBDC, Chair Powell will need congressional approval, which hasn't happened yet. So can you comment on whether or not FedNow is indeed somehow tied to a CBDC and they're just not admitting it?
Yeah, I don't think that's likely. I think that this project, actually, the mandate for no real-time payments has been decades in the making. And I think this is actually a story of the Fed moving incredibly slowly and, not launching a payment system that meets the needs of everyday Americans in a timely fashion. I think a CBDC whether you don't want a CBDC to exist because of privacy concerns, or you do want a CBDC to exist so that we can have more digital money, I think that FedNow is something different, and I don't think it's as interesting or innovative as a CBDC would be.
So yeah, let's talk about a CBDC. Concerns about privacy aside, the transaction speed and the potentially low cost of a CBDC, would those functions not in itself kind of not so much replace FedNow, but serve as a supplement? I mean, essentially they're the same thing, are they not?
Yeah, I mean, look, I think fundamentally, like, money wants to be digital. It wants to be real time. It wants to be global. It wants to be programmable. Those are all things that you know exist in the TradFi financial, the traditional finance financial system, in one way or the other. I think a CBDC would allow you to do things, particularly around programmable money, that aren't possible right now. Um, so I think that would be an interesting innovation. I myself, as you mentioned, we run a life insurance company denominated in Bitcoin. I don't think that a a digital dollar issued by the Fed would change the financial system all that much. I think it would just be a new form of, the old dollar.
But we can transact the old dollar in different ways with different speeds,
Yeah,
lower
I think
costs. That's the argument.
potentially, yes, that is the argument. That is the argument. I think it would be certainly a step forward. Again, I think that um, there are many different ways into the financial system. There are many different, like, places that dollars are stored, and a CBDC would, um, I think all the innovations we've seen with stablecoins, all the use cases we've seen of stablecoins would be, much more widely adopted and much thoroughly used if there was a CBDC. But it's not clear that it's not clear that Congress wants it. And it's certainly not clear that the Fed has the technical capabilities to launch it. Again, I think it took them, decades to launch FedNow, and it is really just a system that many other countries have launched many times over the last 20 years. I think that the Fed taking the step to have a CBDC would have some really interesting benefits, but I'm not sure that they have the competencies to do it.
So let's suppose you were an e-commerce company. Now you had today, as of today, you have a few options to transact B2B or perhaps B2C, and you can pick from a variety of different options. The number one is TradFi, traditional wiring services through your bank. Number two, now we have FedNow. You can use a stable coin, let's say USDT. You can use Bitcoin. Down the line, you can use a
Use
CBDC.
RTP, yeah.
But that hasn't come in yet. So put yourselves in the shoes of an e-commerce company. What would you choose and why?
Yeah, at the end of the day, actually, if you're an e-commerce company, I think the number one thing you care about is conversion, and that is you want customers to buy, which is why often if, like, you're in a checkout flow for an e-commerce site, they have as many options as possible. So you'll have a credit card, you'll have an ACH, you'll have um, there won't actually be FedNow as an option. It's not a consumer-facing brand. Um, so what from an e-commerce company's perspective, I think what they want to see is something that's low cost, something that has reliable adoption, and something that's fast. So you don't have to worry about whether people are actually paying, right? You don't want to ship someone something unless you're certain they paid for it. Um, of all the options you mentioned, I think that the answer is probably yes to all of them, not pick or choose. I mean, if you had to pick or choose right now, I'd accept a credit card. You know what I mean? It's the thing that works.
Yeah. Well, okay. So what is wrong? Let's end it on this, and then we'll move on to the topic. What is wrong with our current payment system that needs either reform or revision?
Yeah, at the end of the day, although I don't think it's necessarily where we're all spending all of our time thinking. 50% of Americans don't have $500 in their bank account. If they have an unexpected charge, their cash flows are very difficult. They work week to week. They get paycheck to paycheck, and for those folks, getting paid immediately and being able to pay their bills immediately could be a real game changer. It would yes, it would decimate banks' overdraft fees and late fees, but it would make a meaningful difference for consumers. So I think that what is the missing link in the system is a real-time, low-cost payment system that, again, like Mexico, like India, like Brazil, and the Fed um, has the ability to implement, not just implement, but mandate such a system, and they aren't. So I think that the only reason that we talk about CBDCs and we get to talk about USDC or USDT is because the payment systems we have are not up to the potential that we see in other countries.
Crypto proponents would say that for consumers, the people you've just described, the optimal solution is just to self-custody your coins and transact using blockchain entirely with other people and other entities.
Yeah,
How
yeah,
would you respond?
yeah. Look, I think again, I'm building in crypto. I'm a big believer in crypto. I think for the typical consumer, they are already spending probably too much of their mind share, too much of their time thinking about their financial services. What they want is something that works. Do I believe that crypto could be that thing that works? Absolutely, I believe that. But for that to be true, what needs to change is the user experiences, right? So right now, like getting USDT or USDC is a pretty, and self custodying it in particular is a pretty arduous journey. And as that changes, as we bring more people into the crypto fold and we have better user experiences, I think that self sovereignty or self custody will be able to change the financial system. But that's only going to happen through magical user experiences, not through a wish that that's how the world works.
Okay. All right, let's move on to another topic. Twitter today, or last night, we branded to X. This was announced, but happened overnight. And the ultimate objective, I believe, from Elon Musk is to make Twitter an everything company: social media, news, financial services. I think at one point he announced that he wants Twitter or X to be, I guess, something like 50% of all financial transactions. Is this something that we've seen ever before?
Well, certainly we haven't seen anything that's 50% of global financial transactions. Look, Elon's vision, all the way, when X.com was what he was running in the 90s, it's what got bought by PayPal. He had a vision for a super app around financial services all the way back then. So that's, almost 30 years ago now. It has been the case that, in some other countries and some, particularly in Asia, you've seen some super apps that can really capture both a ton of financial services, also be a social media platform, also have e-commerce. We haven't seen anything like that in the US. I think it's a really powerful idea. But what we need for that to work is one, an integrated consumer experience, which I don't know about others' experience on Twitter these last few months, but like putting all the moderation questions aside, I think it hasn't necessarily had the reliability I would want in my financial system. And the second is, there's a lot of regulation, for better or worse. Anti-money laundering, know your customer, various licenses. These are all things that are required to operate in financial services. It's something that I spend a lot of my days on, is making sure that we're properly regulated and meeting all the rules. And I would not say that that has been Elon's strong suit historically. Even at Tesla, they've tried to launch a bunch of insurance companies globally where they would sort of self-insure cars. And that has proven very difficult for them because I think the mindset that one needs to run a financial institution and the mindset one needs to run a car company or run Twitter are much different. And I think bringing all those things together is an amazing idea for the right person and the right team. And I really hope that they're able to do that because I think it would really change the consumer experience for the better. But I haven't seen a lot of evidence that they'll be able to pull that together.
Well, let's just talk about the concept of a super app. Like you mentioned, in Asia, that's already existed. WeChat is a notable example. I think 1 billion users by 2018 already worldwide. You can use it to not only send messages, call people, but also use it to pay vendors, video conferencing, and so on and so forth. What have they done that US companies like Twitter could probably learn from?
Yeah, I mean, one thing that you put it really well. It's an integrated experience. It's seamless to move from one thing to another. Payments. You have a social media graph, then you add on payments, then you add on bank accounts, then you add on lending. I think that sequence can make a lot of sense, and it's made a lot of sense for the super app, various super apps. Um, the trick is that really none of those companies woke up one day and announced that they were going to launch a super app. I think what they did is they followed their users' experiences. They built the next thing their users wanted, and the natural evolutions, um, you know, led along these paths. And I think that if Twitter uh, already had a really robust, payments graph, and in our earlier conversation, instead of mentioning Venmo and PayPal, you mentioned Twitter as like one of the big P2P payments systems. I would say, it makes a lot of sense for them to then move on to a bank account or lending. But as it stands, I think what they have is an announcement and a product plan, and not a lot of evidence that they have a realistic path to get there.
A competitor to X or Twitter, WorldCoin launched today. Sam Altman's project. He announced this earlier today, 12 hours ago, actually. So more than 3 years ago, I'm looking at the website. They founded WorldCoin with the ambition of creating a new identity and financial network owned by everyone. This sounds very similar in its ambition and goal. Is it similar?
I think that WorldCoin is really about. I think I don't I don't know, but from the public announcements, what Sam has said is like as we enter a world with a ton of artificial intelligence, a ton of um, you know fake news, a ton of things that are not made by people. How do we begin to confirm that there's a human being behind some of the things we're doing? So the idea of WorldCoin is that every person in the world could have a verified or be verified as human. They actually are not verified. They're not trying to like link your name or your financial records or anything. They're trying to say, David is a human being. So you go get a retinal scan, and you can only use that eye scan for you as an individual. So the idea is to like sort of prove your humanity via digital identity service, and then I think that can lead others to doing financial services and things like
You're saying picking all the fire trucks in the picture aren't enough? That's not sufficient to
that.
identify?
Yeah. Well, the new ones, you rotate like a T or whatever. But yeah, they're all yeah. I think that's exactly the problem they're trying to solve. Like, how do you prove you're a human being?
Okay. The final piece of news I want to touch on, which segues from our discussion on AI just now, is the implementation of AI safeguards. Now, the White House has uh, announced that they've secured voluntary commitments from 7 U.S. companies to ensure that their AI products are safe before they release them. President Biden's statement: "We must be clear-eyed and vigilant about the threats emerging technologies can pose, and that these companies have a fundamental obligation to ensure their products are safe." Can you tell us about what these safeguards actually are, what they mean?
Yeah, practically what the safeguards are is there are a bunch of developers of generative AI, large language models, agreeing that their models will have certain protections in them around asking questions about creating anthrax or creating nuclear weapons, and that they will have red teams or external third party auditors test models before they're published to make sure that some of these safety procedures are within them. And look, I don't think it's what does it mean? I think what it practically means is, it's really easy for the biggest companies in the world with the biggest large language models to agree to um, additional safety checks, costly procedures. I think they're eager to cement their position as like the 7 companies who have the models that meet the rules against the incumbents or against sort of potential upstarts. And it is the case that these large language models are extremely expensive to train. So right now, at least, I think you're seeing that these benefits go to the incumbents. But overall, I think it's in those companies' benefits to agree. And obviously, the White House is always looking for a good way to say they're solving a problem. In practice, I'm not sure what, you can Google and find out how to answer some of these questions. And fundamentally, I think smaller players are going to move more toward open source models, smaller models, edge computing models, um, models on devices. So I think the space is really early. A lot of things are going to change. A lot of things are changing. Literally every day, new things get released. And I think that this was more of I don't know, a piece of show than it was something that's going to fundamentally keep us all safe from the future killer AIs.
Yeah, yeah, exactly. Killer AI. You brought up the example of anthrax as a hypothetical. Can you outline some of these other potential risks? I'm looking at this article from AP. The testing will examine potential risk for societal harm. What societal harm are they talking about?
Again, I think this is sort of like a few months ago there was a statement release. A bunch of like CEOs and folks um, all said they wanted to protect the world from potential catastrophic AI societal risks. But it actually ended up being like one sentence because that's the only thing they could get, 50 people to agree to. And I sort of feel that way about these statements. Like, I'm against societal harms. I'm sure you're against societal harms. I think every AI company is against societal harms. But like, your question is exactly the question that's going unanswered here, right? So what they're saying is there'll be some red teaming. We'll try to prevent people from asking questions that let them, build bombs or, produce, um, killer global viruses. But in practice, I think just like social media, these are really hard problems. They're really hard problems about how to get people you know, to behave well. And I don't think that problem is going to be solved with a one-page statement of principles put out by the White House.
I went to the movie theater over the weekend and I watched the latest Mission Impossible movie. Have you seen the newest Mission Impossible?
No, actually, my wife and I are binge watching all of them. So we just last night watched Rogue Nation, but they all have the same story. So there's a killer plot. There's some thing that's going to destroy the world,
Yeah.
and
Do you know
Ethan
what
Hunt's
this
there
new
to save
thing
us.
in the late? Okay, I don't want to spoil the movie for you or anyone else who hasn't watched it. But do you know that what this new thing that's going to destroy the world is? It's an AI bot
Oh, there
that
we go.
yeah, it's I'm not making this up. Some sort of sentient AI. Well, this computer program has gained sentience according to the film, and is now tapped into every single network in the world, and is changing and rewriting history as we speak, changing the database, doing whatever it wants. And now Tom Cruise and his team has to go find this thing and kill it. Um,
I look
is
forward to
that an
seeing the
actual?
movie.
Is that how? Rate? I mean, we're not going to do a movie review, but rate that threat from 1 to 10 in terms of realism.
Look, there are a lot of very, very smart people working on AI risk, and there are a lot of people sounding the alarm. I myself think that the AIs we have right now, they're only intelligent in the like. There's a type of person who thinks that intelligence is incredibly well rated by standardized tests. So, the AI can get a 1600 on the SAT, so it must be a genius and it's close to killing us all. I think in practice, I think the world's very complicated. It's very messy. It's very difficult to get anything done, even when you have perfect intelligent, quote unquote, intelligence. So I don't want to understate the risks. I think they are potentially real risks in the world from AI. But I'm looking forward to the dialogue and the discourse continuing because what I really want to see is like a clear model for what this risk is, that a testable model that we can make some predictions on. Right now, I think there's a lot of doom and gloom about AI on the one hand, and there's a lot of people pushing forward on the other, and truth probably lies somewhere in between, but we haven't found it yet.
Before we go, I want to learn a little bit more about Meanwhile and this company and the inroads it's making on the insurance sector. And I believe this is the first of its kind because you're working exclusively using Bitcoin. Am I getting that right?
Yeah, so we are the first life insurance company denominated in any digital asset. So we have a subsidiary in Bermuda, and that company You pay it in Bitcoin, so you pay all its premiums in Bitcoin. We pay out all claims in Bitcoin. And then in between, our reserves, our solvency calculations, our financials, everything's in Bitcoin. And what that allows us to do is to sort of be ambivalent about the price of Bitcoin. Bitcoin goes up, Bitcoin goes down, but all our assets and liabilities are in Bitcoin. And then we work with clients here in the U.S. to, help them basically plan for the futures of their children or their nephews or their nieces, their beneficiaries. And we have something that's called a whole life product, lasts for your whole life. It's much like an intergenerational investment account or savings account. So it's a very tax advantaged way for people to hold and pass on Bitcoin. And I think we're seeing some really exciting early adoption.
Are there tax benefits to holding Bitcoin instead of cash?
Oh yeah. So basically, life insurance is incredibly, not just our product, like all life insurance is incredibly tax privileged. It's often a way to structure things around the estate tax. It's a way to lock up assets and potentially borrow against them tax free, sort of like a Roth investment account. And we do all of these normal standard things that any whole life insurance product can do, but we do them entirely in Bitcoin. So, if you believe that Bitcoin, and I should say we comply with all the IRS rules. I have legal opinions that say we're an insurance company. This is an insurance contract. And the point is, if you're planning to hodl or hold Bitcoin for a long time, this is a very tax advantaged way to do it.
Excellent. All right. Well, good luck with your venture. Thank you very much for coming on the show. I appreciate your time and your insights. Where can people learn a bit more about Meanwhile and your work?
Oh, great. Yeah, we're at meanwhile.bm for Bermuda, which is where our company is, but meanwhile.com also resolves you there. Thanks so much for asking, David. I'm happy to be here.
All right. Thank you. We'll speak again next time. And thank you for watching. Don't forget to subscribe.